Welcome back to a special edition of Your Money, Your Call, taking your questions on the market crisis and what it means for your savings, shares and property. For the final 20 minutes, it's all about real estate. So if you've got questions on property, give us a call, 1300 30 34 35. Our regular Monday night expert, Margaret Lomas, is here along with Damien Collins from Momentum. Well, thanks to both of you for coming in. Margaret, Damien, let's look at a few different scenarios here, because obviously interest rates are always a big impact on your industry. This time last week, the week before, there was consensus that the next moves in rates would be up. There's now plenty of people out there who think that the next moves will be down. So there's two scenarios going on there already. There's also playing into this the potential for another spike in wholesale funding rates, particularly in the US, which will of course make life a little bit more difficult for our banks in trying to borrow money to pass on to mortgage holders here. So how do you see, I suppose, the rate situation playing out and what that would likely mean, for mortgage rates over the next year or so?
There's been quite a bit of disconnect, I guess, between what the economists have been predicting and what the futures market's been predicting. I had a look this afternoon, and the market's pricing pretty much 100% chance of a rate cut next month, and as much as 1.5% over the next 6 months. So that might be a bit optimistic, and markets can be wrong, but there's pretty much no doubt anymore that rates are on hold at best and possibly on the way down, which is again great for property investors, especially when we've got markets around Australia where rental vacancy rates are generally pretty low. So with rising rents that might come up and lower rates, yeah, certainly we'll see some investors get in. I think they'll be a bit cautious for the next few months, but certainly if we see any signs of rate cuts, that'll bring investors back into the market.
Kylie, can I just add to that as well, that our banks have got enough money to keep lending until the end of the year, and their problem is actually that people aren't borrowing at the moment. It's not lack of funds that is the problem that's facing our banks at the present time. And we're also returning to very high levels of savings, and of course depositors do provide funds for banks to lend to.
Damien, worst case scenario, let's just paint a picture that perhaps, you do have some very serious problems in the United States and in Europe. Worst case, if there were to be, a recession here, would you still be confident that sort of rental returns would stay up around the levels where they are because of the things that Margaret's talking about, because we do have, a shortage?
Yeah, look, there's definitely a shortage of rental properties, and rents are generally going up around the country. So, look, even if we have a recession, it's not going to help property prices, but I can't see it having a significant impact on the downside. And as you were saying before, once when the share markets historically have taken a bit of a tumble, people go then flight to security. When the markets are booming, people get a bit willing to take more risks, but residential property has been historically very stable. So if anything, absolutely.
Let's go to Melbourne has a question. Chris, how can we help?
Hi guys, just recently sold a property and got a fairly good return, I believe, on it. Now, just a question, is it now a good time to reinvest? So we need to buy another property, we're renting at the moment. Is it a good time to reinvest in the property now, or just wait and see how things go? Maybe, hopefully, prices will get cheaper in the next year or so.
Damien, would you be sitting on the sidelines or...?
Well, Chris, I'd be looking at, especially in Melbourne, I think Melbourne's going to have a bit of a flat time after a pretty strong market run-up. Look, you said it's for your house and it's for something to live in. I wouldn't possibly try and time it too much. I don't think you're going to see significant declines, but certainly see some stable periods in Melbourne. So just take your time, research, look around a bit more and be hard on your negotiation. But to expect significant declines, I don't think you're going to see it.
Margaret?
I guess it depends on where you're buying, and Damien's right, there are parts of Melbourne that are going to see, I think, more negative growth. Some of those areas that they're predicting around about another 3 to 4% in negative growth. They're mostly the areas around the inner city and anything up to about 15 kilometres around the CBD.
We had some questions on this actually come in last week. The strength of the Australian dollar, a lot of people trying to think, well, should I start looking at areas overseas? What are your kind of general thoughts on, you hear the stories, maybe the US is a bad example, but you do hear these stories that you can pick up a 5-bedroom house in some parts of the US for, $80,000 or whatever, but possibly being a little bit more sensible. What are your just general thoughts on looking for properties offshore?
Well, look, there's a lot of spruikers out there at the moment promoting US property, and I guess the best thing I read recently was if it was so good, why aren't the locals buying it? And a lot of these areas are very run down, and it sounds fantastic from Australia. Wow, $80,000. But it's a huge risk, and how are you going to manage that property from such a substantial distance away when you're in Australia, if your property manager is not good? I don't think it's a place for a novice investor to even be looking at. And you talk about other cities. Yeah, look, the Aussie dollar is certainly high, but for the most property investors, it's too big a risk to go overseas.
Margaret, would you go overseas?
Carly, the $80,000 houses are probably worth 40 in reality. I've got a lot of friends in the US and they won't touch the US with a 10-foot pole for very good reasons. And so if they have to come all the way down to Australia to try to sell the properties, there's something going on there.
You mentioned buying in some of these areas that are closely linked to the big resource companies. You're still quite keen on those now that there's, a bit of talk around that perhaps, the growth in China, that the demand for our commodities possibly won't be as strong as maybe we'd been thinking it would. You're still quite positive on those areas?
Look, the commodities prices are still very high. Gold is still extraordinarily high. Iron ore is at record prices as well. A lot of the demand now from China is not just for re-export into products into the US. A lot of it is domestically based. So, look, if there is a slowdown in Europe and the US, it will impact China, but not to a significant extent. And look, but if I were again investing, if you're going to take advantage of the resource boom, again, mining towns are very speculative. Pick a capital city. Perth, perhaps even Brisbane, where a lot of that mining money ends back. That's the better way to capitalise on the mining boom.
Is that what you do, Margaret?
Oh, look, I've never been a proponent of investing in a mining town, and that's because they are speculative investments and they are highly volatile in themselves. And as Damien says, pick some of those capital cities, though. Adelaide's a great one. Roxby Downs with BHP Billiton getting a big contract down there is, you're going to see all that money coming back into Adelaide, and I think it's...
So it's more about regions then, as the big centres near the mining areas, as opposed to specific towns aligned to just one mine, which...
Yeah, absolutely.
I agree, yeah.
All right, we've just got not very long to go at all, but just, I guess, a couple of checkpoints from each of you on people who are sitting back and just worried about what to do with their money at the moment.
Well, with property, it's a long-term investment. It's a lot of expenses in and out with stamp duty and agents' fees, so it's generally much lower volatility. Look for the long term, don't be panicked about the short term. The Australian property price future looks pretty good.
And